Hi everyone. In the previous lesson, we learnt about the Bollinger Bands and an example trading strategy you can use to trade it. In this lesson, we learn about the mystical, the magical, and many times misunderstood, the Fibonacci lines. The Fibonacci retracement, Fibo or Fib lines, is a widely used technical analysis tool used all over the world. It's not an indicator as such, as it doesn't measure any underlying variable of the security, like momentum. In fact, the Fibonacci sequence came about with nothing to do with trading. In Pisa, Italy, Leonardo Pisano, also known as Fibonacci, a 13th century Italian mathematician, came to know of a Hindu numeral system during his travels. Now, in his study, he found a numerical series, now named after him, in which every succeeding number is the sum of the two preceding numbers. For example, 8, 13, 21, 34, 55, 89, and so on. However, the interesting thing about this number sequence is that any number in it is around 1.618 times greater than the preceding one. In other words, each number is about 61.8% greater than the previous one. The most eerie of this key ratio, it's also called the golden ratio between two numbers, is that it is found everywhere in the universe, from the human arm, hurricanes, and even spiral galaxies. Everything seems to follow this golden ratio between them. Many people believe that the Fib sequences are random coincidences and we have a lot of hullabaloo for nothing. However, the sequence has crept into trading and stuck for a long time. Fib lines are now standard tools in any charting software. There's no harm in learning about it. Perhaps it won't be of much use to you, but there's no harm in learning something that may be helpful for you in the future. One more tool in the trading arsenal. The 5 Fibonacci lines used in technical analysis are also based on this golden ratio. The ratios for other lines are similarly derived. For example, 38.2% ratio is the result of division of any number by the second succeeding number in the sequence. 23.6% comes up with any number is divided by the third succeeding number. As you can see, the 5 Fib lines in between 0 to 100, 61.8% is of course the golden line. 50% line is not a Fib line but just a midpoint. The general idea behind the Fib lines is this. Whenever price goes up in an uptrend and retraces, usually it'll touch a Fib line and then start moving up. The same thing is true for a downtrend. Whenever the markets are moving down, the rally will last only up to the Fib lines and then continue to fall downwards. In other words, Fib lines measure retracement. The Fib lines are 38.2%, 50%, and 61.8%. The Fibonacci lines have an aura of mysticism around them. There are no papers or verified backtests that can prove its effectiveness. However, it remains a handy tool for reference. However, we can see a 50% retracement quite accurately without the use of Fib lines. It comes quite naturally, don't you think? Let's see an example on DLF daily charts. As you can see, the market has shifted from a downtrend to this new uptrend. Also notice the next day the market falls again. This is the retracement I've been talking about. The market's been moving up and now we have, say, 1 or 2 red bars which have moved down. Now the question is, how far will this decline continue? No one really knows, but Fib lines can give us an estimate. All you need to do is select the Fib line tool in your charting software and draw a line from the latest swing low to the latest swing high. This is very important. Make sure you draw it on the latest swing highs and lows. As you can see, the market, the fall that is currently at 61.8%. Therefore, we expect the market to bounce back. And this is what happens. The market completely reverses and moves up. That is how you use Fib lines. The same concept works in downtrends as well. So that's it. Those are Fib lines for you. Since they are mostly a reference tool, we will refrain from explaining a full strategy to use from it. I hope you enjoyed this lesson. And if you have any questions, please ask in the comments below. I'll see you again in the next lesson.